everyone. I'm super excited for this video today. I'm here with Kelly Zitlow. Yes, the Kelly Zitlow. Her and I have worked together for probably about 5 years now. We are a great team. She helps a lot of my clients with their financing. And I just wanted to pick your brain in regards to some stuff that's going on in the market today. So obviously the last few years the market's gone crazy. I know people are concerned with the housing prices, interest rates fluctuating. So what's kind of your take right now? Obviously interest rates are going back up. Should people freak out? Should they hang out? What's kind of your thoughts on that?
Yeah. Well, hey everybody, I am excited to be here. So a couple things going on here. First, realize that interest rates got as low as they did because of the pandemic. So that was a point in time, and essentially the federal government, rushes in and tries to ensure that our economy gets through the pandemic. So the Federal Reserve comes in, they lower the Fed funds rate to near zero, mortgage rates drop as a result of a lot of different activities from the Federal Reserve, and so that got us through kind of that 2-year period. Well, that can't last forever, right? So I think what happens is our psychology, we get used to these rates at 2.5% or 3%. We're like, oh, that's the new norm. No, that's not the new norm. That was a point in time. So I think it is important just to kind of understand why our country did see interest rates as low as they were, and then now why they're starting to trend up. So if we look at interest rates over time, and I know I provided you a few charts and feel free to share those, but when we look at interest rates over time, so going back to the 70s, interest rates go up and down over time. And if rates are in the 5s, let's say, which is where they're trending today, then those are still historically great interest rates, So to kind of not purchase a home if you're in a position to purchase a home and your choice is to purchase a home or rent a home, it still makes sense to go through that process and evaluate what you can afford, what your monthly payment is, where that looks, etc. Because my contention, and you can chime in on this, is that the media scares people. It's just such a negative, like, interest rates are rising. Okay, interest rates are rising. They're still historically low, but what does that really mean? So if you're borrowing a $500,000 loan, what does it really mean when your interest rate goes up by 0.25%? So the chart in this video will show you that, but I think, and you tell me what you think, but I think the bigger risk on waiting to buy isn't rising interest rates or the fact that rates have risen. I think it's actually rising home prices. Right?
Exactly. We see homes appreciate over time as well. So what you're saying is people should not wait for interest rates to go back down to, let's say, 2.5%, 3%, because I think that's where a lot of people are at. They see, well, they got there once, maybe it'll get there again. But that was the only time in history they've ever been that low. Is that right?
Right, yeah. Exactly. So that was unprecedented times. Do I think interest rates are going to get to 2.5%? I don't think they are. For them to get to 2.5%, something globally massive would have to happen, like a pandemic, right? Like a war. Things like that are where you see the U.S. government step in and do activities to bring interest rates down. But in what would be considered a kind of a normal, everyday world here in the United States, that's not the case. And so we're not going to see interest rates go back down unless, again, something massive or global happens in the financial markets or, like I said, war, things like that. So that's important. But, let's talk about this appreciation thing because you glossed over it, but I think it's really real. So our market has appreciated at what? Is it fair to say like 20% year over year for the last couple of years?
At least the last 2 years, yes.
And some zip codes even like 30%, right?
Yep.
So in dollars, if that house was $500,000 last year, then it's fair to say that that house this year is $600,000.
Right.
So we're talking about $100,000 spread on just price point. So if we start to get into like what's more impactful, is it the price point increase or is it the fact that interest rates are in the 5s now?
Right.
I contend that it's the price that's really important,
Right.
and nobody's like really talking about it. So are rising rates impactful to the payment if you have to use a home loan? Yeah, they are. But not as impactful as $100,000 more expensive house this year, than last year.
Right.
So tell me what you think about the market going forward. Do you think we're going to continue to appreciate at 20% year over year, or at some point, what does that look like?
Yeah, well, and first, like we're talking about the appreciation over the last 2 years, we've seen it. We've seen homes that people bought them in 2019,
Yeah.
2020. They stayed in them 2 years and they cashed out with hundreds of thousands of dollars over 2 years. So going back to your question in regards to what we are forecasting for appreciation, in history it's been 3 to 5% appreciation. So what we've seen the last 2 years, I would say that's no more. The big jump in price, it's done. But as a homeowner over time, you're gonna, gain appreciation in your home. It's just not gonna be at the same level we've seen over the last 2 years.
What do you think drove that?
In regards to what drove the market over the last 2 years, it's a simple supply and demand thing, right? There's so much demand and not a lot of supply. Now, for the reasons of people, the demand being so high, interest rates being low, people having great careers, people retiring. We have a big generation, the baby boomers purchasing homes, the millennials purchasing homes.
Yeah.
So that's where that big demand came in, and there's just not a lot of supply.
Right, I agree, and I think to piggyback on that, the new build community really slowed down, kind of like in that 2010 timeframe. So traditionally, we didn't have that new build product coming into the market. So that combined with the fact that I really think that people's psychology also changed during this pandemic, right? So they were able to work from home. They found out, oh, I don't necessarily need to be in the office. Oh, I can live anywhere sometimes depending on your job and do your job. So I think that there were just a variety of things that came together that became, I can move up, I can move down, I can move to Arizona. I think that was a big part of it. And, I'm often asked, like, is this a real estate bubble? So when you're asked that, like, how do you respond?
Well, I think everybody looks back to the last housing market crash, right? And you and I know that really came from a lending issue where if you had a heartbeat, you want $1 million, they'll give it to you, right?
Pretty
And
much.
now we have such strict guidelines that if somebody qualifies for it, it's after the lender's really gone through and made sure they can afford this home. So now, and going back real quick to the supply and demand, yeah, it was all in the midst of COVID as well. And people work from home, maybe they got bored and they're like, well, I want to upgrade my home. And so all the supply chain issues with home builds and people wanting to move from working from home just made it all even that more crazier, which we saw over the last 2 years.
Right. And I think that, people might be afraid that, oh my gosh, so again, we quickly as humans go to the new norm, right? So 20% appreciation must be the new normal. No, it's not. It's just, that's what it's trended for all the reasons that we're saying. And if housing appreciates at, let's say, 4 to 6%, that's incredible because that's year over year, right?
Yeah.
So on a $400,000, let's say, market value at 6%, that's $24,000 a year, and then another $24,000. That's what's building wealth through home ownership, and that's what's building wealth over time. We just happen to, if you owned real estate in the last couple of years, what was the norm of that 4 to 6% has been 20 to 30%. In not just this market, right? Like in communities across the country. So this isn't just specific to Arizona.
Right, and I think if people are wondering, are we in a housing bubble? Is the market going to crash? Again, the big thing comparing it to the last time the housing market crashed is people now can't afford their homes. They're not taking out a home loan, right? That's more than what they would qualify for. And I know with COVID, you guys had to go through even more strict guidelines to get these people qualified. So I just don't think, right, that what's going on now is really even comparable to what we saw with the last market crash.
They're completely different circumstances, completely different markets. So to add to that, I've been lending for a time or two, a moment or two, 26 years. So what that means is that I've seen market cycles. And prior to 2010, the lending community was completely different. Kind of, we back up to 2000 to kind of 2006-ish. There were loan programs that existed then that don't exist today and haven't really existed since kind of that 2010 onward. And those programs, didn't require any money down. They had exotic terms, so people thought that maybe they were getting into this, 1% interest rate, which it really wasn't a 1% interest rate. That's what the payment was calculated on. The interest rate that was actually accruing was, 7 or 8%, and that interest rate was adding to their loan balance, so their loan balance was growing versus declining like a traditional home loan. There were stated income loans everywhere. You didn't have to go through the documentation requirements. So that was one piece of it. But the other piece was just inventory. If you really go back to that point in time, kind of like pre-2008, the inventory was much different than what we're seeing today. So it's not any one thing, it's all these things. So do you have a crystal ball?
Not yet.
I don't have one either. I wish I did, but I don't. So when I'm asked, is this a real estate bubble? Like, nobody really knows. But what we can look at are just the facts.
Right.
And when we start looking at the facts, we're seeing that it's just a completely different set of circumstances. We have demand unlike what we saw before. We have different lending guidelines. It's much more difficult. You have to show proof of your ability to repay. Other than a VA loan, you're looking at some sort of out-of-pocket down payment type of scenario. So I think that it's just important to really just take a breath, take a step back, and know that real estate over time is always been a good investment. Even if you happen to own real estate back in that time, if you hung on to it,
Right.
And you were able to hang on to it, then the last couple of years have served you well, right?
Yeah, exactly.
So,
Exactly. And our whole goal with this is to put you all at ease, because like she was saying, people are on edge with what's going on. Are we on the edge of or on the brink of the housing bubble? And so we just hope that this was something to keep you guys calm and calm your nerves. And
yeah.
anything else you have to add with that?
No, I think that's all.
Okay.
Yeah, I think again, in summary, interest rates are going to go up and down over time, right? Market values and appreciation rates are going to go up and down over time. They're just typical market cycles. But I do have one more thing. Like, talk about rising rents, right?
Right.
So those are also rising. So people have to live somewhere.
Right. Yeah, so the rents have gone up. We were at a point last year where it was the rents were way higher than what a mortgage would be.
Yeah.
And a lot of times the realtor would be like, well, hey, you're about to spend this much on rent. Your mortgage will be cheaper. Let's see if you can get qualified, right?
Yeah.
Well, they flip-flopped and it ended up being more expensive for you to rent.
Yeah.
So now that it's starting to cool off and they're starting to see rentals sit on market a little bit more. But again, the market's starting to shift a little bit now. Again, no crystal ball, so we won't go too far down the road. But so yeah, the rental market for sure was crazy over the last 2 years,
yeah.
right? Because the demand was so high that people needed somewhere to live and they couldn't buy a home, then they just rented.
Yeah, agreed. Well, thanks so much for having me.
Yeah, well, thank you.
This was helpful.
Yeah, thank you for all you do, take care of our clients, and I appreciate it.
It's my pleasure. Have a great day.
Thanks.